King, it's a lot of suckers out here with their money, and you can't be no sucker out here with your money.
Bro, I ain't no sucker. Bet you I don't.
Okay. What's assets?
Assets are things that bring money into your bank account.
What's liabilities?
Liabilities are things that take money out your bank account.
Entrepreneurship is the act of becoming an entrepreneur. What's entrepreneurship?
Entrepreneurship is a process of setting up a business or businesses.
Taking on a greater than normal
Financial risk.
What's an entrepreneur?
Entrepreneur is a person that organizes and operates a business or businesses.
Also taking on a greater than normal
Financial risk.
What's financial mean?
Money.
And what's risk mean?
Chance.
Come on. What does it mean to own stock?
When you own a share of a company.
Come on. What's real estate investing?
Real estate investing is when you invest in a immovable property.
What's the two types of real estates?
Commercial real estate and residential real estate.
What's commercial real estate?
Commercial real estate is property for businesses and workspace, like an office, store, or land.
And what's residential real estate?
Property to live on, like a house, apartment, or condominium.
Come on. It comes with extra fees when you have real estate, you feel me? Daddy tells you how many times he pays his state property tax a year.
Once a year.
What's the type of maintenance fee?
Cutting grass.
Come on. What's HOA?
Homeowner association.
And what comes along with that?
HOA fee.
Come on. And when it comes to the brokerage percent, what percent is that?
7.
Come on. What's equity?
Equity is the difference between what your business is worth minus what you owe on it.
Also assets minus
Liabilities and debt.
good job. What's credit report?
Credit report is like a report card letting you know how well you did by paying your money back you borrowed.
And how does credit affect your life?
The better you keep your credit, the more opportunities you'll have to get funding.
And what large purchases like?
A car or a house.
Come on. And always repay what you
owe.
Because if you owe somebody, that means you're in
Debt.
And you never want to be in
Debt.
Because that means you're
Owe somebody.
And we don't never owe
Somebody.
because that ain't what suckers do, period. Come on.
Yeah, man.
And that ain't what we do with our money. We make sure that we make great decisions. Great decisions with our money. I can't get enough of watching that video. Again, thank you for being here. My name is George Demaree, and my co-host,
Ivy Brito, agency owner at State Farm Insurance.
and we're here again because we're going to do everything we can to help our congregation and our audience to be more financially literate. It's important to know that most every decision that you make, most everyone has a dollar sign attached. And today, we have a category that a lot of folks have asked us, Ivy, to talk about.
It has been a hot topic, and I can't think of a better person to talk about that than me. That was self-benefiting.
That was self-promoting. I said, Ivy, now you need to be a little objective when we get through this, all right?
So we're going to talk about auto insurance. And, this topic of this show is Your Money Matters. And with this pandemic going on, many people are tightening their budgets more than ever before, which is a great thing because I think we're being better stewards of our money now more than ever. But one of the things on that budget list is auto insurance. And people are shopping.
Auto insurance is one of those expenses that you just got to have, but do you really know how it works? So we're going to take the next half an hour to 40 minutes just to go over some things, because I have a few questions. And again, I couldn't think of a better person to ask than Miss Brito here. So are you ready?
We are.
All right.
I'm ready. Let's go. Shoot with your questions.
All right. Can you explain what each coverage means on my auto insurance policy declaration page?
Okay. First of all, hopefully you are looking at your declaration page. But if you haven't lately, let me tell you, we're going to go through it in great detail. So if anything sounds confusing, stop me and ask me some questions. But that first line item is called liability. So a lot of people will call in and they say, I just want liability insurance. And we'll ask them, what liability limits do you want? And they have no idea what that is. So the liability coverage on your policy protects the other person. So if you have an accident and it's your fault and the people in the other car get hurt, those liability limits are what you have chosen for the insurance company to pay. Now, a lot of people don't know that
Wow.
liability limits You choose what you want the insurance company to pay, and the rest you're deciding to pay out of pocket if it's more than that. So $25,000 per person is the minimum limits that the state will allow you to have on your auto insurance. $50,000 per accident and $25,000 for property damage. So that first line item where you see 25, 50, 25, that says if I have an accident and I hurt you and I have $25,000, that $25,000 goes to pay your medical bills, hospital stay, doctor bills, any kind of bodily injuries. That second number, let's say you and Yolanda are in the car together, that $50,000, that second number says this is the maximum amount that the insurance company is going to pay out if you all get hurt. So if it goes over and above that amount, I got to come out of pocket if you decide to sue me.
Wow.
So insurance is designed to protect your assets. So if you have a lot of assets, you don't need minimum limits because you're putting yourself at risk financially for having to pay out of pocket. If you own a home, you need higher liability limits. If you own a business, you need higher liability limits. Because if you have an accident and somebody gets hurt and they sue you, you could, you could pay out of pocket.
And considering the cost of medical expenses these days,
right,
you could burn through $25K pretty quick.
Real quick. And the 25,000, that last number is property damage. So if you total out, if I hit you and I total out your car, what are you driving?
Drive a Lexus.
A Lexus. Okay. So if I have minimum limits, 25,000, and I total your car, was 25,000 pay for your car?
Well, if it doesn't, then what happens?
They could sue you. They could come out of you.
So
I know you got money. I'm going to an attorney. Your car maybe cost 35, 40,000. I know you might have that in your savings account because you got a lot of money. I'm going to sue you because I want my car fixed.
Well, if those are minimum requirements, tell me, how much will your insurance company insure a person for? What's maximum?
The maximum is $250,000 per person, $500,000 per accident, and $250,000 of property damage. So when my children turned 16, I decided, because they have a high incidence of accidents and you know how new drivers are, I got the maximum limits on all the policies in our household. So if they hit somebody, or there's a lot of fatalities that go on too. So if they hit somebody and they die, or they have a very severe injury, my insurance company is going to pay. Insurance is designed to protect your assets, so I don't want to pay out of pocket. So my hope is that $250,000 would cover a major accident, and if it doesn't, you asked this question.
I asked right before this broadcast, what do you think about umbrella policies?
I have an umbrella policy. So what is an umbrella policy? Think about an umbrella, a literal umbrella. So when the coverages on my policies are maxed out to the limit, then the umbrella policy gives me $1 million of coverage or more if you select that much. In addition to that, so young children, parents of new drivers, senior citizens, how many times have you seen a car run into a building?
Wow. Yeah.
And that building is got severe
Crushed.
damage. My first thought is, oh my gosh, I wonder how much coverage they have on their insurance. That's thousands of dollars.
Wow.
Thousands of dollars. So that's the liability limits. The next coverage is personal injury protection. Kentucky's a no-fault state. So what that means is if you have an accident and it's your fault, even though it's your fault and you have to go to the emergency room, that first $10,000 of coverage comes off of your policy. So you have to file a claim too, even if it's your fault, even if it's my fault. So that's the personal injury protection. There's varying levels of that. It starts at $10,000. The max is $50,000 that you can put on your policy. Then you have the comprehensive.
So that's different than the first portion of that policy.
That's different than the first portion. The first portion, liability covers the other person.
Gotcha.
When you ask for a liability policy, you have no coverage on your vehicle at all. So what that means is if somebody hits you and they don't have insurance to cover your car and all you have is liability,
You're done.
you're out of luck.
Unless
Yep.
you can sue them for the money.
And most of the time, they don't have any money.
Wow.
So you're really out of luck.
So the next you were talking about?
Comprehensive and collision.
Okay, tell me about that.
So comprehensive coverage on your car. Most people have a $500 deductible. If a tree falls on your car, if your car gets stolen, if it catches on fire, if it's flooded with flood damage, that's your comprehensive coverage. It's not that expensive. Collision coverage is just what it says if you collide with somebody.
Wow, so I didn't realize there was such a difference.
There is a difference. And so a lot of people, if they don't want to carry both because they're trying to minimize their expenses, they'll keep the comprehensive because that also provides coverage for your windshield if it's cracked.
Okay.
And they'll forego the collision. Then you've got car rental coverage. I know your son works for
He worked, yeah.
Enterprise.
He worked for Enterprise, absolutely.
He probably deals with a lot of customers who
He
have
does.
vehicle accidents and now they need a car. So that's car rental coverage that we provide. And then there's death and dismemberment coverage. So that's the most common pieces of coverage on an auto policy.
How would you, when a person walks in the door and they know they need to buy insurance, what kind of information would you need to make the right recommendations on what they should buy?
I'm going to ask them some questions about their assets. And then I'm going to ask them about their car. The year, the make, the model, the VIN number, the mileage. All those things have a bearing on your rate. We're going to ask your age. We're going to ask you how long you've been driving. Have you had any tickets or accidents? And those are the basic things. And we're going to ask you also how many other licensed drivers are in your household, and we'll get to that in a minute.
Wow.
Because we need to cover the entire household, the exposure that's there.
Share with me, give me, before we move on, tell me a story. Tell me a story about a person or a family that you helped that was glad that you walked in the door and because of a situation that obviously didn't think was going to happen, but you were there to help them. Maybe
Okay.
not a name, just a
Okay.
situation.
I have a client who wanted the minimum limits on a policy, which I really don't like to sell. After a conversation and after they understood what those numbers mean, because most people don't,
Right.
they got 100,000, 300,000 coverage. A year after we talked, they had an accident where they hit multiple cars. They fell asleep at the wheel. Thank goodness they were okay, but they fell asleep at the wheel. And because they had the coverage that I recommended, they came back to thank me because they did not have to come out of pocket for that coverage. I hear those stories more often than not.
That's why it's called insurance.
That's why it's called insurance. And you need to make sure that you're talking to somebody that's going to explain those coverages to you. A lot of 800 numbers will give you whatever coverage you want. They don't go into the coverages.
I've noticed that I get things emailed and faxed. I mean, not faxed, emailed and text often about different companies and to go and put in your number and see if you can save. And to a person or to a company, they always quote with the least amount of liability. Well, we can save you money, but it's apples and oranges.
Sometimes it is apples and oranges. Now, I want to make sure that people also understand that as long as you have some coverage, it's good. because there are a lot of people who are driving without coverage. So I don't want the people that do have the minimum limits to think that that's not good. It really just depends on your personal situation. And it's only a few dollars more to raise your coverages to protect yourself. But you need to make sure that whoever you're buying insurance from is explaining what those coverages mean to you.
All right, moving on. Does it make sense to go to multiple companies for your auto insurance, your life insurance, your homeowner's insurance, or does it make more sense with money and cost to try to bundle those together?
So you really need to have those in the same at the same company, and for multiple reasons. Number one, it's easier. You know, you don't want to have to call this company today and company B tomorrow and then company C the next day if you have everything together. But if you bundle your home and your auto together, for example, with State Farm, you get a 35% discount on your homeowner's insurance if you have your car insurance with us. So you're missing out on maximum savings if you don't have those two policies together. Does that make sense to you, George?
Yeah. Well. So if you have them together, well, first of all, it seems from a convenience perspective.
Convenience is number one. Is number one.
That because our homeowners and our auto insurance we have the same company, and it gives us somewhat, I believe anyway, somewhat of a discount.
Right. Like I said, with State Farm, a 35% discount on a homeowner's policy. That's a nice piece of change.
That's large.
That's a nice piece of change.
I may have to give you a call. All right.
But people don't realize that, and some people, for convenience and savings, when you're looking at tightening your budget and maximizing your money and getting the best value for your money, you really need to bundle some things.
What happens, let's suppose that my car is not working, it's not running, it's in the shop for various reasons, maybe for an extended stay. Is it wise to cancel auto insurance?
Not wise. Not wise. In fact, it's against the law. So if a lot of people think that, well, I'm not driving it, I'm not going to pay insurance if I'm not driving it. But if you go without insurance for more than 60 days, the state can pull your registration and cancel your registration.
Wow.
People don't know that. Now, unless you get stopped for some traffic violation, they may not ever find out. But what happens is when you want to start your insurance again, now you're being penalized because you've got some gaps in coverage.
Wow.
So the more consistent that you stay insured, the longer period of time without any gaps in coverage, the better your rate is going to be.
Let's take a little deeper dive into rates. Tell me some of the criteria, some of the things that you go by when people when you give people costs for insurance, regardless of the level of coverage.
So we're going to look at your age. Everybody knows that new drivers are more expensive, and it's like an upside down bell-shaped curve because newer drivers are not as experienced. And then once you start getting in your senior years, the rates tend to creep back up because as you age, your reflexes are a little bit slower. So we look at your age. We look at whether or not you're married. We look at where you live.
Do you get better rates if you're married?
You do in some instances you do.
Okay.
Because when you're married, you tend to be more cautious and a safer driver. Okay. So there's a little bit of, you got somebody else to worry about other than yourself. So we look at where you live. So if you live in an area where there are a lot of claims that occur, your rate may tend to be higher than an area where fewer drivers exist. For example, I grew up in a small town in Kentucky. It's about this big. The rates are less expensive there because there's not as many drivers. When you look at a metropolitan area like Louisville, where there's a lot of drivers and a lot of accidents, and even in various areas of the city, some areas of the city are more prone to claims, and others are not. And so insurance is rated for the risk.
Risk management.
Risk management. And then we look at your car. You got a nice Lexus versus a 2007 Ford. The rates are going to be different because the cars are different, the safety features are different. The cost to repair a Lexus is going to be a lot greater than the cost to repair an older model Ford. So we look at all those factors.
Would the liability be different or just the comprehensive be different?
Pretty good question. I'm impressed. Typically, the comprehensive and the collision is going to be different. The liability may be a little bit different, but the main parts are the cost to repair the car is the bigger differences. And the uninsured and underinsured motor vehicle coverage, which I didn't mention.
Oh, talk about that.
That is a coverage that, for the state of Kentucky, covers your bodily injury. So let's say that I hit George and he gets injured and I don't have any insurance. And he goes to see an attorney. An attorney is going to look at that uninsured and underinsured coverage to pay for your bodily injuries, pain and suffering, lost wages, things of that nature. So that's another coverage that's important to have on your vehicle.
If I have a vehicle, let's suppose, as a young man, I was more like this. Now I don't need as much. Just pretty much, I just want a car just to get home in. Believe it or not, that's true about me today. But as a much younger man, I always wanted as many whistles and bells that I could put on my car. I wanted my car to show up before I did.
Okay.
So what happens? Does that also should we share that with our insurance agent? Should we get more? How does that affect my cost of insurance, or does it?
It really doesn't affect it as much. If you total out a car, what we're going to do is we're going to look at the book value of your car. They look at the NADA book value. So whatever your car is worth based on the book value is what we're going to pay you if your car is totaled. So we pay you actual value of your car, not the market value per se.
Gotcha.
Now, if you can turn in some receipts and things of that nature and prove that you put a lot of bells and whistles in there, they'll consider that.
They're going to pay for my chrome AMG wheels that I had on there?
Take it into consideration.
All right.
Depending upon how long you've had them.
All right.
So turn everything in, I tell people.
All right. I have a 16-year-old son or daughter. And do I now call my insurance company and to let them know that there's another possible driver in the family? How does that work?
If they have a driver's license, they need to be added to the household. A lot of parents will say, well, they're not driving my car. Yeah, they're not, I'm not even letting them drive my Lexus. However, you have to rate for the exposure. So let's say they never drive your car, but now you're having a big party and somebody needs to get out. And so you say, hey, Junior, can you just move it from here to there? And Junior backs into a car. Wow. And now there's a claim. And now the auto insurance company is going to say, well, who's Junior? We don't have him in the household on the policy.
So what happens?
So then we add Junior in the household. You won't necessarily get canceled. But now you got to add Junior because we found out. So countless times we have uncovered secret people in the household. It happens a lot with roommates, girlfriend, boyfriend, which is really a big no-no.
So just talk about that for a minute. So you're coexisting. Mm-hmm. And I have my insurance. I now need to let my insurance company know that there's another person in my household?
If you're coexisting, you each need to have your own.
Okay.
What happens is a lot of times, it's mostly our females who want to add their male friend to their insurance policy because it would be cheaper. So my question is, why don't they have their own?
Okay.
Is the first question. And sometimes it's because they're either not eligible or for some reason or another their rate is too high. And then what happens is if they have an accident, or even if it's a child that's no longer living in the household, because you know we parents, we like to spoil our kids sometimes. So even though they've moved out, we like to keep them in the household on our policy so they can get that multi-car discount. But if they have an accident and now the household is in danger of being canceled, you know, now that risk is falling on you and you have a squeaky clean record, and so now either your rates are going to shoot up, or depending upon the severity of the incident, your household may be canceled.
Wow.
So that's risky.
question.
It's just risky.
I've always said many times that one good question leads to 101. You know.
Yeah, it does.
It really does.
What you got?
So okay, let's suppose I have a friend, and I said, well, I can't go, but take my car and get a loaf of bread at Kroger.
Good question.
What happens if someone hits him while he's in my car?
Okay, Kentucky is a permissive use state. So what that means is anybody that you give permission to drive your car is covered under your car. The insurance is going to follow the car. So if somebody hits them, we're filing a claim under your policy. Even if the other person has insurance, but because your car is, you know, the last one in the driveway and the easiest to get out, if they wreck your car, there may be some legal consequences that you can pursue, but I'm not an attorney, so I won't go down that street. But the insurance follows the car.
Okay, okay, I'm gonna ask it a different way. Now it's a family member. You have a son, like I do too. Mm-hmm. Now they get their own cars and
right.
They're really independent now. But he's in college.
Okay.
And I got an extra car. And he says, Dad, can I take it for the weekend? What happens then?
That's okay, as long as it's for the weekend.
Okay.
Because you get credit for a student away from home. You don't have to, you get a discounted rate on that car because they're not driving that car a majority of the time. So there's all kinds of discounts that's why when you go to get a quote, and we ask you lots and lots of questions, we're trying to get the best rate for you, making sure that we understand all the circumstances. So some people get a little irritated because they want a quote in 15 minutes or less.
Wow.
But there's a reason that we ask you multiple questions. So just be patient, because we want to rate for the risk, and we want to get you the best rate possible.
Well, and this happened to me just recently. I have a clean record, wife and I, mm-hmm. No accidents, knock on wood, you know. Over the last 10 years, I mean, no accidents really for years and years. But yet, when renewal time came up, I had an increase of my rate went up.
Not uncommon.
I didn't feel good about that, you know.
One of the most popular questions out there.
So we need to answer that question if it's that popular. You know?
You know, insurance is based on so many different things. There are so many factors. Part of it is inflation. Part of it is the increase in cost to repair a vehicle. Part of it has to do with any changes in your credit. We talked about credit a couple of shows ago. So if you have made some major purchases, or maybe you've had some dings in your credit, it's not the only factor, but it is a factor. There's no one single reason, but a lot of it has to do too with inflation. So you think about the cost of a home today versus 20 years ago. It's not going to be the same. So gradually, you know, you will see those increases, but sometimes you'll see some decreases if a ticket or accident falls off.
Okay.
If you've improved your credit score, the number of drivers in a household also impacts your rate. If you have one driver in the household versus 4 drivers in the household, you know, your insurance rate is going to be based in part on that. There's multiple factors out there.
Could it be that claims went up in a certain zip code that you lived in? Would
It
that
could
affect?
be. It could be.
We got a question from one of our viewers. Does color of a car make a difference?
No. I hear that so many times.
Do you really?
No.
Huh?
We don't know
So you
if
don't,
it's a
so-
red or
so-
blue or
so
green
you don't
or yellow.
charge
car.
Louisville fans more than Kentucky fans, and Kentucky fans more than
Oh,
Louisville
no.
fans? No.
No, but that is a very, very common question that we get. We look at the year, the make, the model. We look at the VIN number. Color is not a factor.
So I could have a purple and gold car and be okay, huh?
Or pink and green.
You know, and be okay. How long do tickets or accidents stay on your report? And how long before you just talked about you could probably get a reduction in cost once they fall off. How long do they usually stay?
They stay if it's just a speeding ticket or an accident, it will stay on there for 3 years, and then it will fall off. It doesn't. Let me answer one more thing. It'll stay on there for 3 years. Now, if you get a DUI or a major violation, that's going to stay on for 5 years. So that rate, if your policy renews in June, and you have an accident today,
Okay.
your bill is not going to change until it renews in June. So people think, oh, I had an accident. What's my rate going to be next month? It doesn't change until your policy renews, because that's when we rerun your motor vehicle report, and that's when we find the violation.
Does the increase in rate depend on the cost of getting your cars or car repaired?
Not necessarily.
So, an example, if I have a $5,000 accident as opposed to a $10,000 accident,
Does that matter with your rate? I don't think so.
don't?
I don't think so.
All right, I'm going to ask it because we talked about bundling insurance just a second ago. So let's talk. Let's sort of morph into homeowners insurance.
Okay.
I have hail damage, and I need a new roof. Is that going to affect my rate on my insurance? Do you believe?
It could. It could, yeah. Anytime you file a claim, it could. I never answered that question in a definitive manner.
Right.
Because it may not. If you have a 10-year accident-free discount with State Farm, I can't say for other companies, but they do talk about accident forgiveness with other competitors. Sometimes that accident will be forgiven and it won't change. So it's hard to say. It's all really individualized based on your driving history and your payment history and your loyalty to a particular company.
All right. If you're you're married and you have 2 cars, and one person is just a squeaky clean, and the other person's had a couple of tickets and things like that, how does it affect? Is it all bundled?
It affects the whole household. So when we have youthful drivers that have had multiple accidents, and the entire household will be canceled, even though they have their own car, and the parents are squeaky clean. That happens a lot. That's why if your kids are out of the house, get them off your policy.
Wow.
Period.
Wow. So let's talk about, you were talking about rates, and so let's spend some more time on kids.
Okay.
All right, little boys versus little girls. I'm just using that as a metaphor. Little boys versus little girls. I hear, at least in the past, like I said, my kids are adults, so it's been a while for me. So Is it more expensive if I have an 18 or 19-year-old son in the house as opposed to an 18 or 19-year-old daughter?
I don't know.
Oh,
All
wow.
I can tell you is
Wow.
there is a question on the form that asks if you're male or female. But I'm not an actuary, so I don't know how all that is factored in. To be quite honest, I'm not even going to go down that street.
Okay, is there, what then, all right, what is the age demographic then? If we won't go with gender, maybe we can
Okay.
go with age.
Good question. I can
Okay.
answer that one.
All right. Okay.
So there's a couple of things. New drivers, age 16, they've not been driving for more than 3 years, are going to have a higher rate just because they're new drivers and they're inexperienced. When you turn 18, you get a little more of a break. When you turn 21, you get a little more of a break. 25, and then it kind of levels off for a while. But once you turn 65, then it starts to kind of creep back up again.
That was my next question.
Because they're looking at the experience level of a driver.
You know,
So-
my next question, okay, because I have adult kids, right?
Right?
So that's not a issue. Now, I'll be 64 in November. Don't mind saying it. Happy that God allowed me to live that long.
That's okay.
Hope He gives me a bunch more.
Toot your horn.
What happens moving forward? Because I've helped my mother with her insurance, and she's 84, and I think it's pretty daggone high considering what she drives and how much she drives.
It's probably because of her age more than anything else.
Yeah.
It just is what it is.
Back to risk management.
It's
again.
risk management. Yeah.
You know, and
Very seldom, seniors they have accidents. They're more prone to have accidents, more so than you or I might be at where we are in our stage of life. And so you said it perfectly, they're rating for the risk.
she's, like I said, she's 84. She drives home and she drives to church. And she
I have
drives
some
everything.
90-somethings that
Do
still
you?
drive. Yeah,
Wow.
yeah.
That's something.
It's a little scary.
Well, is it anything else? I think we've covered a lot about
We have.
about, and I hope this has been informative. What else about insurances? And again, I know you're being objective, though you're a State Farm person, you know.
Well, let me say this. I do
Okay.
want to say this because we've been talking a lot about price, and I know
Right.
you're tightening your budgets. However, I would encourage you to not let price be the only thing that you focus on when you're shopping for insurance. And I say that because you can get something cheap. You can find cheaper insurance. Every customer I have can probably find cheaper insurance with some company. But it's the value that comes along with having proper coverages that are going to come into play when you have a claim. And the service that you get when you have a claim.
So when you
It's gonna
say
come into play.
value, all right, that
Okay.
means a lot to me.
Okay.
That's a powerful word to
It
me.
is.
All right.
It is.
Trust and value.
Reputation,
Yep.
financial strength.
And I tell people all the time, it's 80% trust and 20% value.
Quality, service. Do you want an 800 number? I had a client that had a homeowner's claim, and initially it was denied. But after hearing her story and knowing that she's been with State Farm for a long, long time, I was able to get some additional facts and get that claim settled. And she was extremely happy. You won't get that with an 800 number. So where's the value? Do you care? People don't care about how much insurance costs until there's a claim. And then they find out they don't have a coverage that they thought they had, or they're underinsured.
So what she's really saying is, this is what we're doing here. If I could take it to its lowest common denominator, we want you guys to be critical thinkers.
Absolutely.
We want you to be critical. We want you to think critically about what you're doing. Critical thinking, ability to analyze objectively, consider facts, making logical conclusions. Most people are not. Most people don't think critically. Most people use biases when they're thinking. Most people will think you cannot put emotion in when you're making these kind of.
A lot of people will make a short-term decision based on a long-term need. And sometimes they're making it out of panic or fear rather than taking a little bit more time to learn and get educated. We talked about that. And I get it that it's a scary time, and I don't want to minimize the fact that people are hurting financially. So I promise that I get that, and I don't want us to forget about that fact. We just want you to make good, sound decisions, ask questions, and research before you act too quickly.
And critical thinking is a skill. And if it's a skill, it can be learned. You can learn to be a critical thinker. I'm going to give you, before we close, I'm going to give you a few points that will help you to be better critical thinkers. And they work. Number one, keep the goal in mind. What's the goal, Ivy? Do you want to buy a house? Do you want to get out of debt? Do you want to pay off your credit cards? Whatever that goal is, keep the goal in mind. And remember, you can't have a goal without a timeline. A goal without a timeline is only a dream. Number two, as we said earlier, take biases completely out of it. If you don't like it, that's okay. What I've tried to do is never allow my ego to get in the way of my good common sense. What makes sense? Three, ask questions, gather information. That's what we're doing, isn't it?
Ask questions. And don't get irritated when people ask you a lot of questions, because they're trying to find out something that could help you.
Don't be afraid to ask questions. Evaluate facts in the situation and get all the data available. Just think, when I was growing up, I can't speak for you, you're younger than I am, but when I was growing up, I had to go to an encyclopedia to get information. Oh.
We had those.
Did you? Now I can get them right with a click of a finger. There's information right there. Number five, collaborate and get feedback from others. One thing I've told my children, if you're the smartest person in your group, you need a new group, You do. Surround yourself with people who can help you, people smarter than me. I didn't know this information about auto insurance, not like Ivy does.
Right.
Right?
Don't be afraid to seek out information and surround yourself with new friends. There's a lot of information out there, and sometimes people are intimidated for fear of appearing unknowledgeable, I guess, for lack of a better word.
Man, that was a great way of positioning that, know. But I'm just going to be blunt. There are no dumb questions, all right?
There are not.
I've said 1,000 times, the only dumb question is the question you did not ask. If you don't know, ask. Number two, and number six, and I've heard this so many times, but it's so true. Think out of the box. Think differently. When you're brainstorming, sometimes the most zany answers in a brainstorm are some of the best answers. And last but not least, consider short-term and long-term consequences. I call it the gap. Yeah. Narrowing the gap between your current situation and your desired situation, and the consequences for not narrowing the gap. Well, yeah. What do you think, Ivy? I think this was a good one.
I think this was a good one. I hope that you've learned a lot of information. You can always email us at info@ssclive.org if you have additional questions.
Tell them what we're going to do next week.
What are we going to do? I forgot.
We're going to talk about employment opportunities.
Oh, that's right. Yes.
We're going to talk about things called, you heard of blue collar and white collar. There's a thing called new collar. Wow.
During this time of unemployment, and this is unprecedented, what we want you to do is realize that there are so many career opportunities out there that do not require a college degree, and those are career opportunities that you can be working on right now, while you're at home. My profession is one of those. You do not need a college degree to own your own insurance company.
Get your license if that's what you want to do.
So we're going to talk a lot more about that, and hopefully
looking forward to it.
Get you in a better state.
We have a lot of information about it. Thank you very much, and have a good week. God bless you all.